What is going on, investors? Hopefully you guys are doing well out there. It is finally Friday. We've got a week before Thanksgiving, and we are thankful that it's time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all the major FAANG stocks. And it was I say it like every week, like almost like I have to, but this week was a big week. We had NVIDIA earnings. We'll talk about that. You've probably seen the video I posted here to the channel, but maybe even bigger than that. We had the Google DOJ smackdown by the DOJ saying that the company needs to not just divest away from its Google Chrome browser, but all this other stuff. It's unbelievable. We'll get to that when we do in the Google segment, but we'll kick things off like we always do. Meta Platforms start of the week at $554 and some change, up just fractionally, up to about $560 per share. Now, we got to talk politics, folks. I know some of you guys don't like this, but we got to, because we got the picks rolling in from the president's cabinet. We've got a big tech critic going into potentially, obviously these things have to get approved or whatever, to lead the FCC. Now, this guy is already at the FCC. I think he's the senior Republican on the FCC. So he's kind of getting more or less a promotion here, but he's obviously been a critic of big tech. But I think it's somewhat different. Now, I think a lot of you are thinking about Lena Khan. We'll get a different FTC chair probably here pretty soon. This is the FCC, which is more the communications division. So he is going to crack down on big tech like Meta and Alphabet, probably more specifically in terms of Google search results. Maybe, again, allegedly favoring one side or the other, different search algorithms or promotions of content inside of Meta. Also, users getting banned off of Instagram or YouTube. Certainly the former president knows what it's like to be banned on these websites in these platforms. So he's going to go after him for that. Now, he's also buddy with who, Mr. Elon Musk. In fact, I think he had pictures from the rocket launch. And so he is going to try to reinstate nearly $900 million in subsidies for the Starlink satellite program. Also, you have the current administration, the Joe Biden administration, pass about $42.5 billion to expand high-speed internet access, particularly in rural areas. I think a lot of this is probably going to go also to Mr. Elon Musk. Now, we've also got the airways, which are broadcast TV. They're going to talk about how the broadcast networks, again, in some people's opinions, the ABCs, the CBSs of the world, well, they tend to maybe cover one political party, maybe a little bit better than the one that President Trump is a part of. So they're going to try to sway those companies for slightly equal coverage. And so they're also going to be pressuring big tech. Obviously, this might not be the best thing from a profit perspective, but who knows? Maybe a better balance on these big tech platforms could ultimately lead to a better business model. Now, what's going to be interrupted is the fact that you got TikTok and Instagram in a big time battle for users, but in Australia, they're basically just going to ban it all for you if you are a kid. Now, also, to go back to the previous story with this Brendan Carr, he's in favor of a TikTok ban, and so we'll see what ends up happening there, but we've obviously got more drama if TikTok is banned. I tell you what, Meta stock should likely skyrocket, and certainly Snapchat as well, a stock that we don't look at very often, but it's currently at $10. Tell you what, you get a TikTok ban and that thing probably go to 20 real fast. Now, how much are AI giants paying for licensing content? Now, we've got a great graph from our friends over at Seeking Alpha. They've been trying to get me to sign up for their affiliate program. I think I'm going to sign up for it. So if you want to sign up for Seeking Alpha, I think I'm going to get like a discount for it as well. I'll have a code. I've just got to respond to them via email, and I'll do that here in the next week or so, and I'll have a code if you want to sign up. But they've got good information like this, and I think these content deals, this is just the beginning. News Corp getting $250 million from OpenAI. Other companies get $10, $15, $20 million. Some of these other deals are not disclosed. This is the future of paid content. These companies, as we've seen, we've talked about here on the show, you're seeing a plateauing of the performance of these large language models. Yes, they're getting incrementally better, but we're not seeing exponentially better. Now, the Blackwell chip, which we'll talk about when we get to NVIDIA, could introduce some explosive kind of breakthrough when it comes to these models, but maybe not. What they need is more and more data, and these companies are going to be paying more and more for it as time goes on. Moving on to Apple, start of the week at 226, up about 1.6%. The finish week at 29. We've got some good news and bad news for Apple this week as their ebook investigation has closed. But I tell you what, other countries are going to see what's going on with Google and the browser wars, and they're going to go after all of these companies. If the U.S. DOJ can do it, then the rest of these companies or these other countries are going to feel like they can do it. And so the mobile ecosystem is basically controlled by Google and Apple, more or less from an operational perspective, but also maybe a browser perspective. So these companies are going to come under fire more and more. Now, Apple is slowly working on a more conversational version of Siri, and that may launch in 2026. What is wrong with Apple? They should have had this out years ago. Okay, we've had Alexa. Now, Alexa might not be super conversational. I think they've had some improvements with it. But like, can we see some innovation over at Apple? I think we've got a lot of like operators over at Apple, and they're doing a great job. You look at the company's financials, they're fantastic, but we don't have a lot of technical chops over at this company. If they had technical chops, they would have had a more conversational Siri out in 2023, let alone 2024, let alone 2025. Now we may get a launch in 2026, although it's done nothing to Apple's share price as it continues to move higher. Now, company is evaluating. This company does too much evaluating. I think we did a story a couple of weeks ago. The company is evaluating like the Smartglasses market. They're evaluating making a more conversational version of Siri. Like, I understand we're looking at a $3.4 trillion behemoth here with a lot of bureaucracy and layers of management that probably needs to get sliced through, but stop evaluating Apple and just start shipping product. Now, the company is pushing the DOJ, which just slapped Google into submission. They're going to try to get the smartphone monopoly case dismissed by the DOJ. And again, we'll have turnover at the DOJ. I think Matt Gaetz was the attorney general nominee. I think he bowed out. I think there's another young lady who I'll have to look into. I don't know much about her. She'll potentially be in charge of the DOJ. We'll have to see where these people stand, and we'll talk about it on a future show. Now, Apple is going to start selling their own Apple News ads directly. So there currently are ads on Apple News. I think the Trade Desk, I think maybe even NBC Universal was handling some of their ad platform over there, but Apple is selling more of those ads directly. This could help Google in the long run. We'll talk about it when we get to Google. A lot of news kind of weaving in with the Google kind of DOJ settlement. But I think the longer Google can stretch its business with the DOJ out, well, these other companies are going to continue to infiltrate onto their business. And then maybe in a couple of years, the DOJ settlement that they're trying to reach might seem as more egregious than it already seems on the surface. Moving on to Amazon. Start of the week at 203. Surprisingly, I noticed Amazon down big this week, down over 3.3%, finished the week at 197. Now, the company is continuing to go all in with their Anthropic investment, including another additional $4 billion investment. This follows several other investments, including a $2.757 billion tranche that came this past March. I think this brings their total investment up to about $8 billion. The company is seeking to raise money at a $40 billion valuation. So you can kind of do the math there. Amazon's got a pretty big chunk of this. Now, I think part of this is Amazon is seeing that these AIs could become the new search engine or a version of search. And certainly the examples that I've seen with Google rolling out AI in their shopping features, it's amazing. It's like find a bike close to me that is red, and then you press enter and it's able to do that. Obviously, Amazon wants its search results right there. Shopify is going to bring its listings to Perplexity, which is kind of a Google competitor when it comes to search engine. And so I think Amazon is seeing this, and if they can weave in enough ties with Anthropic, well, its search results could be proliferated with Amazon shopping results. Now, the company unveiled a new Echo Show 21 smart display and updates to Echo Show. I mean, this company constantly releases these things. And so that's what I admire about Amazon's now. Is its products are as polished as Apple? Are they as good as Apple? Absolutely not. Not from a hardware standpoint, certainly not from a software standpoint. But this company rolls it out. I think if Apple puts their foot on the gas, they can be a little bit more like Amazon and provide updates to their product all the time. Now, to the surprise of the week, I bet not a lot of you guys noticed this because Netflix started the week at 8:15. And guys, we were quietly up 10% on Apple, on Netflix to get up to $900 per share. This stock just churns higher and higher. It's like has anti-gravity attached to its shares. Now, 60 million households, including my own, tuned into that Mike Tyson versus Jake Paul. It is a large bit of nostalgia watching that. I don't think I've watched a prize fight boxing match since maybe Mike Tyson was in his prime. So it was kind of fun watching it. The fight was, as you probably know, somewhat of a disappointment, but also disappointing was Netflix's performance from a technical standpoint. There was a lot of glitches and a lot of reports. I think Antonio Brown on Twitter was streaming the fight from his box seat at the venue, and he had millions of viewers because people were having trouble dialing this thing in from home. Now, I didn't have a whole lot of problems. Maybe it's because I'm not far from where Netflix is based. Maybe it's because I pay $180 a month for internet. I don't know. But what we do know is the company has live streaming NFL games coming on Christmas Day. It's the first time that they had this NFL deal, and the NFL is not going to be happy if they see glitches, and so Netflix is going to have to figure that out. Moving on to NVIDIA, one of the stocks of the week. Started the week at 138, drifted up, and then maybe a little lower towards the end of the week. Finished the week at about $142 per share, up about 2.4%. The company, as you know, reported their Q3 earnings. They were 93% year over year, but you start looking at this thing sequentially. We start lapping those kind of like lower end quarters produced by NVIDIA, and it was about 17% growth. Revenue at $35 billion. They guided to $37.5 billion, which I was disappointed from. And I, expressed my disappointment. A lot of you guys just want people to post videos that talk up the stocks that you own. One thing that we're never going to be over here at the Investor Channel is a cheerleader simp for these stocks. Now, I could get a lot more views. I could make a lot more money here on YouTube if I was just a simp for these stocks and been like the pound the table guys for NVIDIA, for Palantir, for Bitcoin or whatever. But you're here to get it straight. And the revenue was great this quarter. It was more or less what was expected. And the next quarter, while it did meet consensus estimates, it was underneath what many of us thought was possible. Now, some of it has to do with the fact that this Blackwell design is somewhat complex, and they're seeing overheating issues in certain servers. This tends to be kind of a typical thing when a new product kind of rolls out, certainly from the high-end computer chip variety. And from the information that I have gathered, this is a relatively minor issue that will likely be overcome. You're not only switching to Blackwell, you're also switching from air-cooled to liquid-cooled. So I think it's natural that you are going to have some complications here as, again, the server makers and the cloud service providers and NVIDIA kind of figure out how all these things go together. And so I think it's going to be, Blackwell is going to have some hiccups along the way because, again, you're going from air-cooled to liquid-cooled, and that's just something that these cloud service providers just simply haven't done before. Now, Blackwell GPUs are in full production, and the company announced that they had several billions of dollars worth of revenue in the most recent quarter, and that is continuing to progress smoothly. And more importantly, demand for the Blackwell chip just exponentially outstrips the actual supply. So this company is under shipping the market, and so you can imagine those gross margins, which will come in over the next couple of quarters, should expand back into the mid-70s as you go forward. Now, the company is teaming up with Google to design quantum AI processors. So you have a quantum leap potentially as they're combining some H100 technology with quantum computing. I tell you what, Google has a lot of chip designing prowess. It's probably an underestimated aspect of the company. You've got Google, you've got NVIDIA teaming up here. Man, these AI processors, I bet they'll come up with something pretty cool there. Now, Sam Altman's not waiting though. He's looking around for investors to come up with an NVIDIA competitor. Good luck, buddy. NVIDIA has been working on the GPU and their technology for, 2 or 3 decades now. He's trying to raise $150 million to value a company at $600 million, which basically NVIDIA farts that out every 12 hours or so over at their company. No, I don't think this is a good idea. I think this is throwing good money after bad. You have NVIDIA in the marketplace. You have AMD. You have Intel probably potentially as well. You have Cerebras, which we've talked about on the semiconductor show. You have competitors out here. I don't think this is a good use of money. I don't think this is a good use of resources. You have plenty of semiconductor companies. You have companies that are exceptional at it. And I don't think starting another one is a good idea. Now, NVIDIA backs CoreWeave, which is a cloud service provider, kind of on the quote smaller end, but have gotten priority allocation from NVIDIA. They're going to be targeting a $35 billion valuation in an IPO next year. They started raising money, I think, at about $7 billion, maybe even less than that. Company is looking to raise about $3 billion in an IPO. And where do you think that $3 billion is going to go? If it's not just insiders kind of selling shares, if some of this $3 billion is returned to the company, well, they'll probably turn around and buy more NVIDIA GPUs. Moving on to Google. Oh my goodness, folks. We started the week at 173, down 5%. And you see we had a cliff drop as we finished the week, like I said, down 5% on Google at about $164 per share. Now, the DOJ is confirming they are going to split off Google Chrome's browser. At least that's the recommendation. So I wrote a newsletter. If you're not a fan of the newsletter, and let alone a subscriber of the newsletter, links are down in the description to every one of the videos that I post. This is a free newsletter at the time. I do have a team working behind me trying to monetize my assets at some point. So this stuff won't be free forever, but right now it is free. A federal judge is asking Google to sell its Chrome browser. Moved aimed at breaking up its control of online search, where Google, as you know, handles about 90% of all searches. Now, here's the thing about the Chrome browser. It is worth, by estimate, at about $20 billion or more. Folks, we can count on one hand the number of companies out there that singularly would be able to buy the Chrome browser on its own, and it's all the companies that we talk about on today's show. You know, Amazon would love to buy the Chrome browser. You know, Meta would love to buy the Chrome browser, but then it would put it into the hands of another mega cap tech giant that would do the exact same stuff that Google was doing with it. The agency also wants Google to stop paying companies like Apple. I was actually shocked that Apple's share price did not drop more than it did this week, because I actually think Apple would be impacted more than Google. Even if Google had to sell its Chrome browser, I think people are still going to be using Google search. But if Apple's $20-30 billion a year went away, well, that was all gross margin and gross profit for the company. So that would impact the company, at least financially, more than Google, in my opinion. Now, Google must also allow websites to opt out of its data and information from being shown in AI snippets at the top of search results, because website owners are complaining to Google that it's basically snipping out its content, putting it at the top of the Google search, and the website owner is missing out on a click and a chance to convert that click into an ad click or a sign up or whatever. Also, Google must this is the most ridiculous thing that I've ever seen. This makes me feel like we're living in the country of China, folks. And there's no offense to the country of China. The people, I'm sure, in the country of China are great. I'm sure that there is a good life to be lived in China, but it's a different system of operating there, where the government basically has its hand on every single business, certainly nationalized businesses. And listen to this. Google must divest its Android phone business, or, and this is unbelievable, folks, have the court supervise the court. Guys, this is a federal court. This would be a federal, basically a branch of the federal government would supervise the division to prevent anti-competitive practices. This is communist China stuff, where they're supervising what TikTok does in the country, or what Baidu does in the country, or what Alibaba does in the country. And they're basically monitoring what those companies can do. This is absolutely ridiculous. It's not a contortion of 20 tech leaders from around Silicon Valley and maybe around the world that would maybe caretake over Android and turn it into like this nonprofit thing or this open source kind of consortium of software and everybody can kind of implement it. No, it's that the court, which is a federal court, could supervise Google. This is ridiculous. This is ridiculous stuff. And people should be ashamed of themselves for electing people and creating a system in the United States that think this is okay, that we can court supervise companies, that some of their core businesses. This is ridiculous, absolutely ridiculous. And I think Google, and I'm rooting for Google to fight this tooth and nail. Now, this newsletter goes on. Some of you might be wondering what's going to happen in here. I do have a timeline of events. Now, the ruling in this case is final. Now, the things that we have to understand is this is under the previous administration. Now, I don't know how much Donald Trump will have sway in this. He could probably potentially have some sway in this, and the new DOJ and the new Attorney General could influence this case a little bit, but my understanding through talking with legal professionals, which I am not one, but listening and talking with legal professionals, the verdict is now final. Now, Google is going to recommend their own solutions here. So this is what we got. This is what the DOJ, the government, which is trying to really overstep itself and overreach, well, it recommended it do some crazy things that are outside, in my opinion, of the Constitution and really what the federal government should be doing. Hopefully the court recognizes that, but again, the court is recognized as a federal arm of the federal government, and the judge was likely appointed by a former president. Google is going to announce its own plans, and they'll obviously be a lot softer than what the DOJ has announced. They're not going to say, oh yeah, we'll sell the Chrome browser, and oh yeah, we'll turn the Android phone business over to an arm of the federal government. They're not going to do any of that. They'll probably announce some type of sharing. Maybe they pull back on some of the payments to Apple, or they open those negotiations up. I don't know. We'll see what Google does. They are going to plan that in December. Both plans will be presented to the judge. So the judge is going to get the DOJ plan and the judge will get Google's plan. And it'll be up to the judge to determine a series of remedies. That decision is not expected until sometime later next year, either in the springtime or potentially as late as August or September. Now, even when the judge makes its ruling, and let's just assume they adopt the entire DOJ ruling, well, then at that point, Google is going to be allowed to appeal. And my guess is Google will be granted that appeal and likely a stay on the verdict or any type of remedy that was suggested. And so Google is likely going to be able to tie this up into court. So yes, Donald Trump is coming into president, but we probably actually won't see a resolution in this case until after the president is out of his 4-year term and you have a new president in for their potential 4 and maybe even 8-year term. And so this will likely span the entire Trump administration. So you have status quo over at Google. What is status quo over at Google? It's hundreds of billions of dollars in revenue, and it's tens of billions of dollars in revenue every single quarter. That will likely continue for the next several years. We also have information that, yes, other investments might be unwound as part of the DOJ antitrust case. But again, this stuff is going to get tied up in court. And the longer it gets tied up in court, the more you're going to have a shifting landscape in technology. You're going to have OpenAI releasing their own, yes, you guessed it, web browser to challenge Google. You also have OpenAI potentially compete to become the default web browser or default search engine on some of these other search providers and these other browsers that exist out there. I think in the long run, Google is going to be fine. I think these remedies are absolutely ridiculous. I think there's a chance that the Trump administration deals with this slightly differently, but we have to keep in mind a judge has made a ruling in this case. I don't think the judge is going to get removed from the case. I don't think the president can just come in here, or even the new DOJ, quote unquote, new DOJ can undo these types of things. But if we get 4 years of deregulation and kind of a softer stance, which the president has kind of outlined that he would rather have in this case, well, I think Google is going to be just fine, and any pressures on the stock probably should be purchased. Moving on to Microsoft. Started the week at 415 of fractionally. Finished the week at around number at 417. The company continues to expand its AI strategy as you have a new agent builder. So the companies are really going all in on these AI agents. This is where you can kind of tell the AI to, book your favorite, hey, I'm trying to plan a vacation to Puerto Rico. And then you press enter and it books your flight, and then it books your hotel, books your rental car. It picks out an outfit, it does all these different things across numerous different websites. That's basically a high level what an AI agent does. Now, from a business perspective, we can train it like a human to do multiple multiple tasks instead of computer program tends to be very linear where you give it a task, you get an output. This is you get a task, you get an output, and then based on that output, you go do another task. And so these things are very, very powerful. And certainly over the Christmas holiday where I might have a little downtime, you better believe I'm going to be playing around with one. Now, Microsoft, this was interesting too, unveiled Windows 65 Link as its first cloud PC, I would say cloud PC operating system. Now, Microsoft heard concern from IT professionals about vulnerability of endpoints of stored local data. So you have the computer device that you're doing something with for a corporation or even a government entity, and it has a stored operating system on the device. And now if the operating system needs a patch or an update, sometimes those things can be vulnerable from an endpoint standpoint. Well, if you have Windows 365 where the endpoint or the operating system is actually a cloud-based, well, that can obviously be constantly monitored by Windows and it can constantly be updated. I think this is pretty cool. I bet all operating systems or most in the future will be cloud-based. That also will help AI. Moving on to Tesla. Start of the week at 344, and Elon Musk continues his foot on the accelerator as shares of, you're going to want to see this technically too, up 2.35%, finished the week at 352, and you better believe his buddy Donald Trump is going to ease those United States rules for self-driving cars. That's obviously going to be a big boost to Tesla as they are basically in the back seat as it relates to self-driving cars. Now, I didn't know this. Currently, the National Highway Transportation Safety Administration, one of these administrations maybe DOJ will get away with, but you have car makers are only allowed to deploy 2,500 self-driving vehicles per year. I mean, 2,500 for a company that's worth like $1 trillion. That's not enough. But previous legislation has tried to get that to $100,000, but it has failed. So potentially with the Republicans feeling like they owe Elon Musk a debt of gratitude for helping the former president come back to the White House, maybe they'll move it up to 100,000. I don't think this just benefits Tesla. This obviously benefits anybody, including Uber and Google, certainly Amazon, for wanting to get into the self-driving market. But I think it benefits Tesla the most. Now, the Optimus humanoid robot, which I am extraordinarily bullish on, not just from Tesla's perspective. I am super bullish on these humanoid robots because this is like virgin freaking snow. This is like the snow just came down. There's nobody on the lift. You get a VIP suite all the way at the top of the lift, and you get a snowmobile to take you back up the top after you gracefully ski down this virgin snow. I mean, there's nobody making money in humanoid robots. This is like nobody making money in search, nobody making on online e-commerce. This is what you dream of as an investor. Now, is it early? Yes. Is it going to take a while for this business to scale up? Is the monetization efforts going to have to scale up? Yes. But just like search engine, just like social media, just like e-commerce, just like just like smartphones, they scaled up. And if you are in on the ground floor, you basically could set yourself up for life. And this is what this type of investment is going to be. And now we have the lovely Kim Kardashian posing next to not only the Optimus robot, but also it looks like that cyber taxi as well, as she is fully on board the Trump train and the Elon Musk train probably too. Now, XAI hit a $50 billion valuation in its latest funding round. I had somebody talk to me about, well, Elon Musk's Twitter, he paid $40 billion for it, and now it's not worth anything. Well, no, he just got the president elected in large part because of Twitter. I think a decent amount of that has to do with that. But also, look at the valuation of all his other companies based on helping the president get elected. That $40 billion he's, quote, underwater on his Twitter investment, I don't think the guy is sweating it at all. Let's move over to the technical segment of the show. We have bumped up against a bed of resistance right here at the top of the S&P 500. This thing has just confirmed a new higher high. We were hoping for a deeper pullback, but these things are not pulling back at all. I mean, we are in first of all, we are in a steep uptrend on this one. It goes back basically forever. We are in a very tight channel since 2022, but we are now even in a tighter channel since August of 2024. I mean, these markets are going straight up. This is why people are feeling so good about themselves. This reminds me, guys, so much of kind of this, early 2021 to 2022 period where everybody thought stocks would only go up. They're going to come down. They are going to come down at some point, but you continue to hold, bump up some stop losses. If you don't like stop losses, well, you better be able to stomach the downside. But the time I was doing videos here, most of you actually couldn't stomach this loss, and then you couldn't get back in. So you got to train yourself ahead of time for these things because they are coming. When it'll come, I don't know, but that moment will come pretty soon. Now, with Meta, we're actually looking for a pullback on this one. It did break some support here, which is like, right, I mean, it's a range of support here in like the 560s. We would like for this to break, go lower, because you've got opportunities south of 500 on that one, which look pretty darn good. Apple is just churning at the top of a channel. It's basically confirmed a new higher high on this one. This one, like a lot of these stocks, just continue to move higher. You continue to hold there. Amazon just confirmed a beautiful new higher high. It found resistance at the middle of the channel. These middle of the channels can be resistance points as well. We did that. We pulled back. Actually, Amazon is a buying opportunity. If you want to step in Monday or Tuesday, this can be an area where maybe you start a position, you add to a position. If you don't want to get smoked on it, let's just say this is the top. I'm not saying it's the top, but at some point, this will be the top and these things will break, and they'll break probably pretty hard. But you have a stop loss at 180 on this one, so you're risking 16 to the downside to make a new high in the 220s. So you got pretty good risk toward there. Netflix has gone parabolic, folks. And this is what happens when you break to the upside of a new high. We've seen this with Palantir stock as well. People are like, oh, what's up with Palantir? We said it. When you break to new high, it's anti-gravity. You don't know what is going to happen to a stock when it breaks to these new highs. What you wait for, though, is pullbacks to the previous high or somewhere in that range. So with Netflix, we're waiting for pullbacks back into probably 775 or lower. NVIDIA is just churning up this trend line. This is also very similar position as Amazon. It's close enough to the bottom of the channel where if you do want to step in, this could be an area with NVIDIA. Just keep in mind, again, we are on a breakneck pace here. These paces have to break down at some point. But with tax policy deregulation kind of at the backs of these companies and maybe potentially a lighter touch from a regulatory perspective, well, maybe you got further upside. With Google, we have multiple trends. We obviously have a longer term trend that dates back. I mean, we're talking almost 15 years, in fact, more than 15 years. So you've got this longer term trend. That's this dark green line here, which I'll change to purple just so you can see it kind of in the frame. That's the longer term trend. So we're still above the longer term trend with Google, but you've got this kind of intermediate trend that we've identified. We're at the top of that channel, but Google's kind of weird. It had this blow off top after announcing, I think, a dividend and a massive buyback and just better than expected profits. You had a little bit of a blow off top on this one. And so some people would say in the shorter term, you made a high here and a lower high, but I would actually just say this is just a continuation. This cluster of high is just a continuation of the higher high that we made back here in 2021. So we're pulling back on Google. There's areas probably starting about here. I wouldn't be wildly aggressive, but as you get back into the 150s, I even said it in my newsletter, this one, as you pull back into the 150s, in my opinion, should be bought, just again, based on the fact that that regulatory stuff, while it's ugly in a vacuum, it's going to play out over years and years and years. Microsoft also in an area where if you believe kind of this trend that we're in more recently, this can be a buying zone. I do have a green box here. We're slightly above it, but we're close enough with these companies and the trends are so strong. Also with Microsoft, this purple line is the longer term trend and we're actually approaching it. So as you approach longer term trend, look, you buy these things as they approach shorter term trends. And in my opinion, you get really aggressive as they approach these longer term trends. Now, these longer term trends will break, but it's very easy to set stop losses on these longer term trends, so you don't get hurt. This one, I have nibbled on Microsoft at about the levels that it's at now. I would be much more aggressive as we approach this line. Now, Tesla's in an opposite situation. In fact, Tesla has reversed from the rest of these. The rest of these are more closer to buying zone. Tesla is not. It is in this shorter term, and I've kind of separated with these purple trend lines. It's at the top there, but it has gone straight parabolic. We are going to be approaching all-time highs on this one at 415. And so if you're bullish Tesla, and look, I've got plenty of Tesla. I don't know how many shares I have, but it's a lot. It's tens of thousands of dollars at this point. You might have a Netflix and a Palantir moment. If you get above 430 on this one, there is no telling where this one will go. It's very similar to crypto as well. Bitcoin's breaking up to $100,000. When you get to those areas, you just let that baby ride. Set a trailing stop loss, because at some point you do come back and you have back tests. Those back tests are good ideas. Now, if Tesla fails at this area, doesn't move all the way to all-time highs, you get pullbacks anywhere back to 300 can be a buying opportunity. Folks, that was the FAANG Stock Recap Show for Friday, the 22nd. Now, I had to push myself. I got this really weird light thing here, and I want this to be a quick edit because I haven't eaten today. I'm going to go have dinner with my family. Folks, we are moving into Thanksgiving. I'll see you the day after Thanksgiving. Thanks very much for being a fan of the show, watching the videos, liking, subscribing, all of that thing. I wish you and your families this holiday and this Thanksgiving season good health, good food, good fun. Have a safe holiday, and I'll see you the day after Thanksgiving. I guess that will be Black Friday. See you then. Good luck with your investments.